Hey everyone. In today's episode, I'm going to get into why the Melbourne boom is set to last for a number of years. It's not a common episode, but the reason I do this episode is because I work with a few people and I also speak to a few people obviously on a daily basis. And there's quite a few still objections to Melbourne. And the reason I want to make this video is basically to cover a lot of the objections people have and explain to them why this will last for a number of years definitively. And if you don't agree with me still, I don't know what's going to convince you. You must be believing in Santa Claus or the Easter Bunny's going to tell you something else. But anyway, in today's episode, we're going to do a few different things. First of all, where the Melbourne market is at. Secondly, what I expect to happen. And then finally, the best regions to invest in. So look, this might sound a little long-winded, but I'll start with where, first of all, the Melbourne market is at. And really, I've just done it since COVID, so everyone knows. You'll see here, basically, Melbourne has completely underperformed everywhere, and this is only till the start of 2025, it's gone up a little bit. It's probably at about the 11 or 12 mark since this actual graph was done from the ABC News from CoreLogic. So it's only done, about 10 to 12% probably in that time period. Pretty incredible considering it's one of the best performing suburbs areas long term. But you can see Perth, Adelaide, and Brisbane right up over everything else. Then you can see obviously you got ACT, Hobart, Sydney, and Darwin all sort of lagging in between that as well, sort of more towards Melbourne. So that's kind of what's happened with Melbourne. It's lagged completely. To give everyone some clarity on that as well, like Melbourne really itself too, it's really done nothing since kind of like 2017, 2018. Like it kind of peaked then and it was kind of flat right through to about 2021. So it's only kind of done that's in like 7 years, like 10 to 12% as an aggregated, median there. So, it's done literally nothing. But look, if we go then to other cities as well, just with how cheap Melbourne is too, you'll see here that basically Melbourne really, it's lagging basically everywhere. So, you can see its average long term there. I'd say Brisbane, Adelaide, and Perth. Look, it says here, and this is basically just for, your house prices or home prices there. So it probably averages around, 20 to 30% there. But if you take it to detached houses, I'm telling you, it's somewhere between 40 and 80. It's a lot higher than that because what they're doing is they're bringing in all these other things that just, I think, are completely irrelevant. Sydney, it's generally only about, 20 to 25% cheaper than that as a long-term average. In should I say more ancient times, it was a lot less than that. So, Sydney, it's like more than 40% cheaper than literally, it's cheaper than Sydney, and that ratio is ridiculous. So anyway, that's where we're kind of at with Melbourne in relation to other cities. However, it's actually our best long-term performer. So what I've done here is, again, I've showed you the Aussie Home Loans 25-year report. I like showing this because it's between 1993 and 2018. It's not when you had a 0.1% interest rate, which you may not get for another, I don't even know. You may never get that again. You probably will at some point, but not for a number of years. But anyway, this is what Melbourne's done. It's clearly our best performer, followed closely by Sydney. No doubting that at all about that. Look, it's such a good city to buy, and it's very, very, consistent performing as well. And I'll show you that also in this next graph. This is the CoreLogic 30-year report, if anyone wants to search it up. I don't know if they actually have it online anymore after changing to Catality, which is the former CoreLogic, should I say. But it's our most consistent performer here as well. So, look how consistent kind of that is going up. Sure, it has minor corrections and then returns the favor, should I say, and then increases again. It does that. Don't get me wrong. But to give you an idea, if you wanted to know where it were today and you were to do this out to 2025, it would be probably where the comma is just after the S in the houses. That's where it would be at 2025. So it's really done very little since end of the 2017 boom. Melbourne, and it is literally our most consistent performing city by quite some way. So, very, very good for that. I can't see, how you're going too wrong buying there because it's just, done so well. All right, so really, what am I saying here? Look, what do I really expect to happen? I think Melbourne will be our best performer over the next 10 years, and I actually think it's going to be the best performer by quite some way. So you'll see just here really just kind of what's going on here with Melbourne. This is the, again, CoreLogic 30-year report, and what they've done here as well is they've showed the top capital city SA3 regions over the 30 years. So SA3 regions, it's not necessarily council regions only. They do go across some, but because so Sydney does go across a few, Melbourne does as well, but it's just basically broad regions. It includes usually somewhere between 5 and 10 or 12 suburbs or something like that. But you'll see here Melbourne just dominates it. Yarra, Melbourne City, Boroondara, Maribyrnong, Port Phillip, all there, close to 700. Even Brunswick, Mornington, all of them, Essendon, all those areas, like really good areas to buy. I mean, above 700% growth, 4 of them. That is incredible. Like, those numbers are insane. So where do you think I buy? Like, the predominant suburbs I buy in all of these areas that you can see here. Port Phillip as well, and all the top of Hobson's Bay as well, which performs the same as Maribyrnong. Hobson's Bay doesn't show as good because Hobson's Bay is a much bigger region that isn't completely landlocked, but the particular suburbs I pick will perform the same as pretty much Maribyrnong. Melbourne City doesn't have any houses left, so that number's probably irrelevant. Yarra I buy in all the time. Boroondara, yes. Port Phillip, yes. All good areas as well. Best areas to buy. I mean, I can't see how you lose money buying these areas when it's done so poorly over recency as well, when you know it's going to do so well over the long term. So, just something to consider. Like, that's what happens long term with these areas. Mind you, Melbourne did next to nothing between the COVID period of the start of 2022 when this actual table was put together. So, I mean, if you want to, just say, oh yeah, this includes the part of COVID, Melbourne did next to nothing. These areas it's pointing out did next to nothing. The part that actually did best of Melbourne was Bayside, and none of that's actually included in here, funny enough. So, yeah, like some parts of the Bayside I like purchasing, don't get me wrong, but this shows you really the good areas to buy in, undoubtedly. So look, really, why is it going to be the best performer? I've showed this in the past, but it was a very good graph that I like explaining to people because people don't understand it. So these are basically markets, again, they run in cycles. It's not completely linear. You generally have a larger scale cycle with 2 smaller cycles within it. So you generally have a longer, you generally have a longer stabilization period followed by a shorter boom, then a short stabilization period followed by probably a little bit of a larger boom, then a longer stabilization period again. It goes around in circles, kind of like that. So the 3 parts you can see here are your downturn and stagnation. So you can see in the early 90s, you had your 92 to 97 stagnation period kind of there. That was your longer stagnation period. Then you went to your 2007 to 2012. Yes, it grew a little bit, but not much. And then you have your longer term stagnation period, which was now, which again, it didn't grow very much, but it's your longer term stagnation. So it didn't do very well, but that's basically kind of what happened there. So that's kind of what's happened. Then within that, you've got your upturn and boom phases. So you got your 97 to 07 there. Which you can see did quite good there. Then you also got your 2012 to 2017, which is quite short and sharp. And then I've got 2025 to 2030 question mark. Look, the reason I got 2030 question mark there is because in this actual episode and what I'm explaining here is it is going to run for a number of years. I don't know how long it's going to run in saying that because I'll get in this later in literally the next few slides, but there is a variation between where it goes up, where it sort of has a little bit of a slowdown, and then where it really kicks off. And there's a buffer period between each of those, which I'll explain in coming things. But Melbourne is really due for the next boom. It is our most consistent performer, and it has performed the worst over recency. So I can't see it doing badly at all in the future. It is going to do extremely well, and it's going to run for a number of years. I'm telling you, it's not going to be a short cycle. It's going to run for a number of years, 100%. So I'm going to now get into basically an actual graph I've actually put together myself using basically econometrics data, correlation, everything I do there. And I just want to give you some insights into just a few rules about what I'm going to do here. So first things first, the boundary of the existing Melbourne, I'm assuming is maintained. If they move this out right out to past Melton, right out past the Dandenong Ranges, it's going to change the capital growth. So wherever the Melbourne City is today, Greater Melbourne. That's what I'm assuming they are doing. I'm only counting houses here. I'm not counting anything else. I'm actually only counting detached houses. I don't care about any other dwellings. So keep that in mind as well. And I'm assuming the government continues to do what they do, which I'm telling you they will, but I can't say that definitively because obviously I don't control the government. And that is they'll continue to money print their way out of shit, which only increases prices of everything. They'll continue immigration, which whether it's Labor or Liberal, I'm telling you they'll continue to do that. They'll continue to have centralised wealth, so the government controls all the wealth, which is in all the CBD cities. It's going into almost like a communism phase in some instances, but I mean, a communist, not communist, but like, I mean, a capitalist country that is kind of where the government's kind of going towards a communist route. I mean, like the UK is, for example, generally the cities get even more expensive. It's just what happens. And you'll continue to have centralised businesses and jobs. So, I mean, I don't really care what the government kind of says about, oh yeah, we're getting jobs here, there and everywhere. Yes, there are in probably the Sydney Basin and probably Geelong as well. But I mean, outside of that, like, watch what they do, not what they say. Like, it's full of shit. It's just not the truth. So just on what I'm about to show everyone, just keep in mind that these areas here that I am actually explaining and showing to everyone, this is what's going to happen, assuming these things all stay the same, which I assume they will. The first two things are going to stay stagnant because if you take in what I'm saying, they will. The third thing, I'm 99% sure it'll stay the same because it's just what the government does. But anyway, what will really happen here is Melbourne will first of all go up. It'll then stabilise, and then it'll really go after, and then back to sort of the stabilisation and the downturn and stabilisation phase. That's what I expect to happen. And now, this might look like very sort of complicated in how I've drawn it, but I'll show you what I'm looking at. This is basically what I've done. So if you look on the bottom right there, you'll see the key series. So I've basically done a high series, a median series, and then a low series. So this is what I expect to happen in Melbourne. I know I've previously said 90 to 120% growth, and this is how I basically got to it. So really, at the time of actually making this video, Melbourne had a median house price, including that area, of about $917,000 at the time. Now, if you say it's more, all you have to do is just do the percentages and say it's going to go up to that. But at the time, on CoreLogic and also home price data, that's what it came out at. So that's where I started at. Now, all I've done is I've basically used long-term market cycles, long-term correlations, long-term strategy, long-term income demographics, gentrification, international demand, and everything. I've basically put it through a few econometrics tests, and I've actually basically from there, all I've done is I've actually populated it based on what I've got. This was drawn based on that data, so that's kind of what I've got here. So you can see here, the high series up 2.017 million. By that is, so 10 years from today, so it's by 2035. Middle series or median series was 1.88 million, and low series I had at 1.72 million. So even if you want to say I'm wrong, or even if you say I'm slightly wrong, but it's going to be lower than the low series, you're still probably above, 1.7 million from 917,000 today. So I don't really know how you can go wrong there. But anyway, what I want to get into here is what I expect actually to happen. So there's 4 key parts of this that I expect to happen, and I'll give you the standard deviation as well off each of them, because what can happen here is what I've done here is just over 10 years, but there is a buffer between basically standard deviation of each cycle or each part. Now, what I'd say here is I'm going to give you the first 3 because I'm saying until it hits the downturn and the slowdown, okay? So first of all, you're at the beginning of the cycle. Now, the standard deviation of this will be something between, I'd say, 6 and 12 months. It'll be something like that, your standard deviation of this, right? Something like that. Now, what we have here is, first of all, you've got more liquidity coming into the market because you've got interest rates dropping and money printing continuing and government spending continuing. And then you've also got the incentives, which is like the 5% deposit, which is the government-backed subprime mortgages. But anyway, the government will have to continue to back that. But so that's the key things you got in this cycle. And naturally, with liquidity and also, should I say, incentives in the market, you'll have natural growth. Now, even the low series here has growth, and I'm telling you, even if it does nothing, simply because you're going to have these incentives coming in, developers will just price up their stock, more people come in, it's just natural. It will happen even on a low series. It's undoubtable this will happen. So don't get confused over that. It's going to happen. So look, you can see there, like your minimum growth even over the next 2 years is probably minimum probably 15%. And you got the higher series right up to about probably 25 there or something along the lines of that. So that's what I'm kind of expecting in that early stage of the cycle. Surprisingly to what a lot of people don't understand, and don't kind of know, I actually think we, in the late sort of 2020s, we are going to get a GFC style event or slowdown kind of event. That's something like that will happen. So what I've got here, and just to break down that for everyone here, is that the more well-diversified cities here will be less affected by it. And the reason for that is because generally their jobs are more required in the market, and they always will be there. Dependent late city cycle cities will be badly affected. So this is when I actually expect your cities like, for example, your Brisbane's, especially your Perths and Adelaide's, and obviously regional centres around that, to really completely slow down and maybe even go through a bit of a downturn as well. Look, your standard deviation over this period is again probably similar. I'd say it's probably around somewhere between probably 6 and 12 months either side. So that's what I'd say in terms of standard deviation. So yeah, that's kind of what I'm predicting in kind of that kind of period. That's your set number 2. Look, Melbourne and Sydney particularly, and the surrounding cities there, they may correct a little bit. So you can see my middle series has a slight correction there. My low series doesn't, because it'll just be too low price to correct. That's the reason. My middle series does, because basically there, people just follow the crowd, and it can correct. It's just generally how it works. So that's why it's my middle series. My upper series, it just kind of slows down but still goes up, because it's just people are still very hot on it. My third phase of it is your larger growth phase there. Look, this I expect to run for probably somewhere between, I'd say, probably 4 years, maybe 5, something like that. I expect it to be something like along the lines of that. Your standard deviation of this, however, maybe 1 to 2 years either side of it. It's just because sometimes it does very well in shorter periods, sometimes it's a little bit long. So that's the thing. So you'll see here, I've got a few points just here. You've got diversified cities will grow substantially. Melbourne and Melbourne surrounds will particularly dominate. So that's in Melbourne and Geelong in particular. They will absolutely dominate this period. I expect them to absolutely dominate this period. I expect them to be by far the best performers. You can see just the growth here I'm expecting of it. I expect Sydney Basin to do quite well as well, not as well, quite as well as Melbourne, but are still expected to do quite well in that time as well. Your finished cycle cities, so that's just going off point number 2, they will completely stabilise or lightly grow. So it'll be in their complete stabilisation phase in this period. So I expect them to be very flat or very lightly grow in this period. That's what I'm expecting to happen here. So as you can see here with the growth cycle, you'll see here really that you have, literally a large scale period. You can see the first period of growth and a little bit of a slowdown, then the second period of growth will be massive. It'll look like an uptrend line when you zoom out further on this, but this is generally what happens in a more, focused period. So this is only a 10-year period. So that's what I'm kind of expecting. That's your growth period there. That's about your 10-year phase there. Of growth. Then what you'll see is it'll peak and hit point number 4, which is your market peak downturn, then going into your slowdown, which is your stabilisation phase. You'll have the Melbourne market slowdown and downturn will begin. Sydney Basin will be similar to that, so it'll underperform Melbourne, but it'll be similar because they correlate fairly similarly. Then what will happen is your smaller cities will end the stabilisation phase and begin the upturn phase over the coming years. Funny enough, your eastern cities like your Sydney and Melbourne generally correlate, and they anti-correlate or go against basically the correlation of your other cities. So if you're smart here, this will be the time where you get back into your Melbournes and Perths, not your Melbourne, sorry, your Perths, Brisbanes, and that kind of, obviously still buying the right fundamental areas, but this would be the time to get back into them. That's just the truth of the matter. So really, this is a really good time to pick it. Your standard deviation of this is about 6 to 12 months either side of it as well. So Again, if you were to take the short end of this, I mean, it could be a lot earlier. If you take the longer end, it could be further. But this is just how markets run. So to give everyone an idea, if you take the extremity of the standard deviations of either of this, you have obviously either side of it. So you got 12 months at the most of, should I say, the start. Then the second is also 12 months. So that is, should I say, 2 years in total. Then you'd have 2 years either side of, should I say, the main part of this, and then which would be 4 years. So that would be an 8 year difference between the whole run of the cycle here. That would be your absolute extremity of it, but you'd also have on top of that as well. It could go a lot sooner. So this could happen by, I mean, this could go as far as probably, I'd say, right out to maybe because you're still using the period, it could go right out to you maybe 2036 or 2037 mark, and this whole cycle could be done by 2031, to give you an idea. So, but this is the median basically time I think it'll take in the market. I think this will be, because Melbourne's a very, should I say, consistent performer generally. I actually think the actual period of this will be fairly accurate. I expect it in sort of somewhere between 2033 and probably 2036 to actually run exactly like this. But that's kind of what I'm expecting. I hope, like, this did take me a fair bit of work to actually model and do. So I hope everyone's really enjoyed this little segment in this, because this is really what I expect to happen. This is a breakdown of exactly what I'm expecting Melbourne to do. So the next phase of this, I'll actually get into the best regions to buy in Melbourne. I'm actually going to be very nice and actually give you a suburb in each of the regions to buy in as well. All right, let's start. My favourite region to buy in, the inner west of Melbourne. So look, for those that don't know the inner west, it's basically really Maribyrnong and Hobsons Bay Council region. It's really that. I mean, my whole understanding of it is that there's obviously suburbs that in the past were quite derelict. People didn't want to live. A lot of your working class lived here. If you just look at the history of the Western Bulldogs, it was known as the club of the working class, really, which is in West Footscray, to give you an idea. But the income in this area is just incredible. So, I mean, that's the reason I love this area. It's still cheap. I mean, I'm still picking up for around $1 million, sometimes right down to about 800,000, believe it or not. But my pick of the whole area is the most typical inner west suburb you could get in Melbourne, and that would be Yarraville. There's a couple of reasons for this. Look, this is what the town centre looks like. This is just by the theatre. Beautiful, very atypical of the inner west, villagey. Right by, very trendy, right by the village centre, very walkable. It's very common in the inner west. Yarraville has a median weekly household income of around close to $2,500 a week. That is literally similar to Marrickville in Sydney, and it's priced at about $1.1 million at the moment, right? It's one of the most in-demand suburbs. It's very tightly held, and it's pretty much in demand from a lot of very wealthy working professionals, and people don't like to sell here because they love the suburb. So Yarraville, long term, if you look at the Aussie Home Loans report of 25 years, long term Yarraville actually performed at 9.9% capital growth. Now, that's the average of the suburb. You take out the attached dwellings and you also take out the ones on the main road, they're done above 10%. And you can even extrapolate that right to like 1950 and before if you really want to, depending on how hard you want to dig. And I've picked up properties in Yarraville with like 3.6 to 4.1% growth, to give you an idea. So it's an incredible suburb for that. It is one of my favourite of the whole inner west. I've picked it up below $1 million. That's rare now, but below 1.1 definitely. So one of my favourite suburbs to pick. I see this suburb being worth well above $2 million in 10 years' time, to give you an idea. Let's go to one of my other favourite regions to buy in. That is the inner east of Melbourne. So the inner east is basically, I'd call it probably from, I'd say, your Kew Hawthorn right out to kind of your Box Hill North down to Burwood, and then into the CBD from there. That's your inner east. What it's kind of about really, there's a lot of good schools, it's kind of like an old money area of Melbourne, a lot of homes on bigger lots. Quite a lot of the population live there for the schools and also the prestige of it too, particularly around Camberwell, Canterbury, Deep Dean, Mont Albert, that kind of area is very well known for having big residences, a lot of wealthy families living there. But my pick of all the suburbs is on the don't get me wrong, the western side I call it the eastern side of the inner east, sorry, and that is Box Hill. Look, the reason I picked Box Hill is because it's very underpriced. So if you look online, it might be around 1.6 million, but I'm telling you, still picking up things in Box Hill North, Box Hill South, which are all in the right pockets for 1.5 mil flat, that you can actually develop in the future or just buy and hold long term. Look, Box Hill as well was one of the best performers in the entire country longer term, and not only that as well, I'll tell you too that Box Hill as well there is actually has, got very, very good demographics. It's in demand from very wealthy people, particularly the Asian community. They like buying in here. They hold it for long periods of time. They love it. And not only that too, I'd say as well, on top of that, that performance is just going to revert to its longer term average. It's near all the good schools. It's got good income. It's basically another CBD center. There's a lot of jobs around Box Hill as well. So you can't really go wrong. Buying here is one of the best locations in all of Melbourne to buy in, especially with where it is at the market cycle in that. So Box Hill is my pick for the inner east, basically. Not many better places to buy than that. Really, really like Box Hill. Let's go to one of my favorite areas, and that is the inner city. Look, the inner city really, it's kind of, I'd say, just south of, Brunswick, kind of just south of there. It includes Yarra and Moonee Valley Council regions mainly. You can say Melbourne City, but there's barely any houses there. It's obviously renowned for being close to the city, very gentrified, very walkable neighbourhoods, good street areas. Known for its restaurants as well, known for its cafes, alleys, all that kind of thing. But my pick really is Cremorne in the inner city. Now, Cremorne's only about $1.3 million at the moment, to give you an idea. But it's got the second highest weekly median income per household in Melbourne. And it's only second to Kooyong, to give you an idea, which is literally straight across the Yarra. Now, Cremorne itself, to give everyone some clarity, it's close to $3,000 a week median income, and the monthly mortgage repayments there, this was in 2021, was literally only, I kid you not, literally $2,300 a month. So people there could, afford their monthly mortgage repayments in a week, and the actual ratio that was like 23 or something like that. And 30% is generally gross. Is generally what they say about, keeping, the ratio consistent, if that kind of makes sense. So, that's where Cremorne is kind of, and that ratio as well, mind you, is also in 2021. The median monthly mortgage repayments wouldn't have moved much by then, but the actual income was increased by about 10 to 15%. So that ratio is even lower. It's probably like 20 now, which is just insane. And it's one of the best performers long term. So Cremorne itself had done something like 10% long-term growth almost, and that's also including dwellings that I wouldn't buy. So it'll do above 10 long-term if you look at it, and it's at the best point of its market cycle. So, great deal in that. One of my favourites. This would be, I'd argue, a top 5 suburb to probably buy in the whole country. Very, very good one in that, and that's my pick of the inner city. The inner south and southeast. I'd say that includes south of the Yarra down to probably, I'd call it probably about Caulfield, then straight towards Port Phillip Bay to about Elwood. That's, I'd say, your kind of inner south and southeast. My pick is Prahran in that area. Look, the suburb itself of Prahran it's kind of like an inner city, I'd say, kind of Paddington, Darlinghurst, Neutral Bay kind of suburb of Sydney. It's kind of probably like your West End, South Brisbane, I'd call it your Mount Lawley of Perth or something like that if you want an equivalent. It neighbours literally Chirac, which is the most expensive suburb of all of Melbourne. It's right next to South Yarra as well. It is mostly full of apartments and miners' cottages, some attached terraces as well. It's a very, very good suburb for that. I really, really like it. It's really close to a lot of very expensive suburbs. It has very high median income. and it's about $1.5 million at the moment, mind you. Mind you, I'm still picking some of these up for like 1.2 to 1.3, believe it or not, that are actually rentable. I've even picked one up, believe it or not, here for actually under $1 million, which is a very rare deal, but we actually got it done. You won't find that anymore. You might be lucky to get under 1.1 now, but that's kind of where it's at. And I mean, it's close to all the jobs. It has very high median income. The ratio, again, of weekly income to monthly mortgage repayments is very low. So that's another thing about Prahran. And I mean, yeah, it's a good suburb in that. I can't see how you lose money in it. I'd say it would perform probably similar to Paddington in Sydney to give you sort of some longer term insights. So that's where I kind of expect it to go. That's my pick of the inner south and southeast of Melbourne. Look, the next two locations I'm going to get into are, first of all, the Bayside. And the Bayside, look, the reason it's not these ones are right kind of down lower is because some of them actually grew quite a bit. So some parts of Bayside actually did 40 to 60% growth over COVID because of what happened in Melbourne. And so you don't want to buy in that because you're already buying well into its growth cycle, so it won't do as much. So what you want to do is pick a suburb that's done next to nothing over that time. And that suburb I'm going to pick is a suburb called Moorabbin. Now, Moorabbin's just kind of in from Sandringham. And it's a very atypical Bayside suburb. So it's most of the homes there, your original bungalows, your original some federations and that kind of thing. Most of them on your 450 to 600 square meter blocks, sometimes above. 3-4 bedroom homes, very common. Near a lot of good schools. A lot of families live in there as well. And you still pick up Moorabbin for like 1.1 or 1.2 on a block. And I mean, for the Bayside, that's so cheap. Like you look at Sandringham, it's like $2 million, mind you, and it neighbours like those sorts of suburbs. Hyatt, I mean, not far from Hampton either. I mean, really, really good suburb. Bentley East. So really good for that. Good median income as well. I mean, Moorabbin itself has a good ratio of the median income too. Not only that, so you got a lot of families here, very high owner-occupier families that actually send their kids to local schools. So that whole period of this suburb will be significantly higher than a lot of surrounding suburbs. And also, I mean, if you're picking it up at literally when it's done nothing, it's done like 10 to 20% over the last 7 years. You know it's going to do crazy numbers when the growth cycle hits. So Moorabbin is one of them that I think is very underpriced in the Bayside. And I target it regularly. I like the suburb. I mean, I've got good relationships with a lot of agents around here too. So that's my pick for the Bayside, Moorabbin. Let's get into the final pick of the area and the suburb I've got here. And now I'll put this also down at the bottom with the Bayside. And the reason is because I like the area, but it's not all parts of the area. So that is the inner north of Melbourne. So it probably goes no further north than probably Pascoe Vale South, no further north than probably, I'd say, Thornbury and probably Coburg. Maybe you could argue the bottom side of Coburg North as well. But the reason I got this in there is because I generally like buying closer to the inner city. So that's obviously your Brunswick East, Brunswick West, Essendon, Alphington, those sorts of suburbs. I like them a lot more. And my pick of this is Brunswick. So Brunswick itself, I mean, it's obviously very well known throughout all of Melbourne. I mean, it's got a very kind of, should I say, village-like sort of centre, should I say, as well, which runs obviously literally straight through the middle of the suburb. If everyone wants to know where that kind of is, just look at Sydney Road on a map. That runs straight through Brunswick, kind of there. It's very, very atypical of, a Melbourne suburb, a lot of cafes. You got the tram running straight through it. Very gentrified. A lot of small miners' cottages here. A few apartments as well. Most people don't have cars around here. A lot of professionals live here nearby. Brunswick itself, mind you, hasn't done very well since kind of that 2017 and COVID period. It's only done about 10 to 20% growth, especially in some pockets. It's about 1.3 million at the moment, to give you an idea. Very high median income, very low ratio monthly mortgage payments. I like to a lot of suburbs I'm mentioning. And it's very tightly held to a lot of people in the right parts of Brunswick. So it's not all parts of Brunswick, but the right parts don't generally sell their homes. They like holding on to them. So that's the thing. So if you've got all these characteristics, completely landlocked suburb, no more stock coming to market, I'm telling you right now, the suburb is going to perform very well over the future. So there's no doubt about that. Brunswick will be one of the best performers in Melbourne for sure, and it's definitely my pick of the inner north, that in Brunswick. Great suburb, great streets to buy in, really good location. I can't see how you lose money in it. Easily one of my picks and easily my favourite pick of the inner north of Melbourne. So that's basically my summary of all the suburbs I buy in, the regions, should I say, and there's my picks of the suburbs. So look, I thank everyone for watching this video, and if you're someone who is looking really seriously to get in the market and you want a buyer's agent, mate, you're more than welcome to reach out and have me chat to you about it via www.compoundinvest.com.au/inquire. Basically, all you do is you just put your details in and you book a time for a 30-minute free call, where I just give you a phone call. We discuss what you're looking to do, what the best way forward is, and draft a strategy around it. Now, even if that's not you and you're looking in 3 to 6 months, or let's say you might be looking or just a bit confused about what to do in the market, I still recommend you reach out, because the strategy is even more important than the purchase itself. If you stuff the strategy up, you're definitely going to stuff up the purchase, because you cannot get the purchase right without the right strategy. Yes, I would always get the purchase right, don't get me wrong, but the strategy is so important it's not even funny. So that's the key thing here about it. And if you really want to know some of the results and stuff I've got in the market, you can also sign up to a segment of my actual site called Premier Properties. You can find that in my website just via the menus, the menu items tab. You'll find it there. What Premier Properties will do is it'll just show you an expected return. So the 30-year long-term capital growth plus the gross rental you would expect on a property, and it'll give you the total return. So you can see the returns I'm kind of expecting for a lot of the deals I'm kind of doing there. If you want to suss me out a bit more, look, I get it. It's all good, no stress. So again, look, I do appreciate it. If you want to reach out, www.compoundinvest.com.au/inquire. Look, you're literally only using 30 minutes of your time, and you're getting it for free, so you can't really go wrong there. So I don't know a better deal than that. And look, I really appreciate everyone watching this video. I hope it was a great value to everyone. If you have any suggestions, pop into the comments below, and I'll see you in the next one.